Alrighty, folks. I don't know about you, but I got to catch up on all of the major headlines that were broken at Resi Day. Lots of stuff to talk about, but first we got to talk about Bill Pulte. Bill Pulte has been in the news here recently. He most recently talked about a 50-year mortgage, and then just yesterday broke that portable mortgages are something they're looking at. Lance, amazing get Mr. Pulte at the event. What was that like, and what are all the new things that broke at Resi Day?
Yeah, so at Resi Day, which we had it on Friday, November 7th in New York City, Bill Pulte, the director of FHFA, he had to pull out. He wasn't going to be able to do it. And so I had to do my presentation that was going to be at the end. I had to do it at the beginning. And then as I walk off the stage, Bill's on the video screen. And so we were able to have a conversation with him. He made a little bit of time. I'd say the majority of the conversation, it's kind of like what you're used to hearing Bill say. You know, he went after Jerome Powell. He called him a maniac 3 times at Resi Day. He then went at the builders for like hoarding the lots. Yeah. I have a bit of a different view there, but and so he goes through his conversation, and he at the beginning, Anthony, my business partner Anthony Pompliano, had asked him about Fannie Mae and Freddie Mac, but he kind of diverted the conversation a little bit. So I went up to whisper to Anthony, and I was like, hey, ask him blah, blah, about the conservatorship. Anthony asks him again, and he says, Fannie and Freddie will remain in conservatorship. So they're going to remain. And the reason that matters for the housing sector is it takes off the uncertainty of if they were to leave conservatorship, could it push up mortgage rates? Absolutely. So that's really what I was cared to find out. Like that 30, 50 basis points of risk, is it still there? And it's off the table, according to
Nice. That's breaking news, because there's a lot of people talking about them going public. Bill Ackman being one of the largest shareholders talking about that. But the fact that he comes out at Resi Day and says, you know, it's not going to happen, they're going to stay, is good news. There has to be 30 to 50 basis points of risk that would be added if they're out of conservatorship. So that's breaking news. Nice work.
Then he proceeded to say, instead, what they would do is sell up to 5% of their stock. There is already some of their shares that are out there. Yeah. Sell 5 to 6%. That's kind of like what they've talked about as going public or IPO. It's selling some fraction of their shares, but keeping them in conservatorship. And he said that Trump would make a decision within the next, I think he said few months or few weeks. Okay. So it is on the table now in terms of what they're going to do. But I think that the risk for the sector is been pulled back from that.
I agree.
So I think that's good. That was important. The other thing is they had talked about, the fact that Fannie and Freddie could take stakes in tech companies.
I saw that.
And he kind of brought up the Intel deal. I don't know what that means. I don't know which companies. I kind of have a little bit of a speculation, but I'm not going to say.
Oh, come on, Lance! It's just us and 1,000 people on the internet. Come on.
So I don't know what he meant by that. I don't know how much impact that has to housing. I think that is a little bit, I think it's something outside of housing, just as an economic thing to kind of keep a radar on. Is like, is the government going to do more of these types of deals? That kind of has a China-y feel, right? Yeah. And, so that's kind of a little bit of a,
it's picking winners and losers, which is not something you want the government doing. That's a big no-no.
Be nervous about it. Yeah. And so for housing, I don't think it has a big impact, but it's kind of concerning, right? It's
I agree.
Attention on. And that was the Resi Day news. Then the next morning, and so I took my whole family to New York, my wife, my 3 kids, and, the deal was after Resi Day, Saturday, Sunday for the family, we wake up in the morning, and of course, Bill had tweeted out a subtweet of Trump, and it had said something about like great American presidents, FDR, 30-year mortgage, Donald Trump, 50. And then Bill says, he didn't say we're looking into this. He doesn't say we're thinking about it. He says we're moving to. And so the internet blows up. And so I ran a poll on my audience, and my audience, I would describe them as all over the political spectrum, right? Maybe on Twitter it leans a tad more to conservative or right on Twitter now, but but when you polled the audience, it was 80% were unfavorable to it. So it's unfavorable. Yes.
Okay.
So people were upset across different political views, right? Concerned. And I think a lot of the public pushback is the psychological part of just the number going from 30 years to 50 years. There's something just aspirational about not having a mortgage, all of that. I dug into the numbers and kind of really wanted to just have a very number driven like view of this, because I just needed to dive in deeper before I wrote too much about it. So I spent the past few days doing some analysis, and some of the things that I found, and I could share my screen if we're good.
Yeah, you can do that.
Share. I always click the exit like I'm about to exit it, and then okay. Okay, can you see my screen?
I can. It should be coming up.
Okay. The first thing to note is that the longer the term, the higher the rate for mortgage.
Of course. Yes.
A 50-year mortgage would come with some type of higher rate. Since 1991, the 30-year fixed mortgage rate has been 57 basis points higher than the 15 mortgage rate.
Great data.
That was really something key to start off the thinking about it. Yep. Logan Odeshami, housing analyst at Housing Wire, he thinks it would be 52 to 57 basis points. Some other people are speculating online because the 20-year treasury isn't that much different than the 30-year. But when you go around the sector and talk to people in mortgage, they think there would be some type of premium.
It's not zero. It's definitely not zero.
The guy who runs Mortgage News Daily, he thinks it could be up to 100 basis points.
Wow.
I don't know.
That would be. If it's 100 basis point, the math doesn't work.
Yeah, because then also another thing is the PMI gets higher, like the rate, and it stays on longer because you pay off the premiums or principal.
Great point.
So I did the analysis and I went with Logan's low end. Like, let's just say it's a 42 basis point. Maybe they work some things out. There's lower risk. Let's go with that. So on a $400,000 mortgage, at a 5.5 rate on a 15-year, it's $3,200, a little more than $3,200.
Yep.
On a 30-year, at a 6.22 rate, it's just over $2,400. And then at a 50-year, it's 6.64. It's about $2,300. So there's about $150 drop here. Now that doesn't factor in the PMI, and the PMI, because the PMI rate on a 30-year is higher than a 15-year. And so the 50-year would be higher than the 30-year, and it would stay on longer because you're paying off principal slower. So when you run the numbers, what you find, and this is my core view, is that the 30-year fixed mortgage rate is actually a sweet spot. And it creates this really big payment drop from the shorter term ones. But beyond it, you don't start to get that many more benefits. So I think if we were already in a 15-year mortgage environment and then we move to a 30-year mortgage environment, it would create a tremendous amount of demand in housing. It would happen. But going from a 30-year to a 50-year, because that payment amount isn't that big of a difference.
No.
I'm skeptical about how much. I think it would still be a niche product. And so if you go through it, the things that were obvious that were pointed out is that you would pay substantially more in total interest on a 50-year. But then again, that alone isn't a huge deal breaker to me, because the vast majority of everybody who takes out mortgages doesn't actually stick around.
Every 8 years. Yeah.
And so the typical homeowner tenure now has moved up to 11.8, but mortgage, it's a little bit shorter. So that to me isn't like the biggest deal breaker. I think really where it is just more concerning is that just the math of it, because you're paying down the principal so much slower. Your payment difference isn't that much less. And so like here is a hypothetical for equity building, 15-year versus 30-year versus 50-year. You can see obviously 50-year is going to build at the slowest. And then let's say you take the payment difference and you invest it into the stock market.
Oh, look at you.
It's still within 10 years, didn't cover, it narrows it, but it's still down. And so I think that here's my big thing with it is I think that this product would be niche no matter what if it were
Okay.
rolled out. I think people would still lean into the 30-year.
Mm.
But I think that in strong appreciation markets, there could, and some people have said like investors and people might want more leverage in those lower rate, higher appreciation markets, and maybe that pulls in some, but still the math from 30 to 50-year isn't that big of a difference that I don't think it would be that much of a swing. But who it really would create value for, its main niche would be in an environment where appreciation is high and you believe the next several years it will be high for a particular home buyer who cannot afford a 15-year mortgage, cannot afford a 30-year mortgage. And so their choice is either I do a 50-year and build some equity, or I continue to rent and I build no equity. For that specific person in a market where appreciation is high and they can get in on that gravy train of appreciation, for that person in that specific moment, I think that's where it has its value. So I think that this product, if it was out there 2012, 2022, I think that's where it would have for that price.
Well, let me throw one wrinkle at you, and then I just came up with this morning. I think you're absolutely right on purchase. Everything you've outlined here is exactly what I think. It's a niche product, but where I actually start thinking about this now is the average American doing a cash out refi. I think you'd be shocked at how many Americans are running up against the edge, and they would basically go to their lender and go, "Hey, how much cash could I get out of my house and keep the payment the same?" Right? Because in theory, if they're already paying $2,200 a month and they just stretch the term out, they could in theory get 30, 40, 45 grand and their payment doesn't change. So I actually think the 50-year would be more impactful on refis than purchases, is what I'm thinking this morning.
Yeah, but now there still becomes the problem of like, so many people have that pool that would be eligible to tap the equity. So many of them have the lower rates. And so going to these higher rates would create a huge,
I agree. When I think about the average consumer, that's what freaks me out is the average consumer is like, I need some money. I need to do this. I need to do that. I'm just going to go get a 50-year because I'm going to get 40 grand and nothing. They're going to tell themselves nothing changes.
So, okay. So let me go. So I think what would happen for that person is their payment might still go up, but for them, they were already going to do that cash out because they're in desperation and take the higher payment potential. But now this kind of helps it to make it to where that payment jump is less than
the payment shock is not as much. Yeah.
Yes, is not as much, right? So it would be like that would be a desperation.
It would be, and I think you'd be shocked. I think maybe I would be shocked. I bet you if you ran the 50-year mortgage for 2 years, I think you would see a disproportionate amount of refis into 50 than purchases with 50. I think refis would be higher. Just my wild guess.
Interesting. Yeah. No. Yeah. Interesting. And so the other thing is, in a weak appreciation market, the 50-year obviously becomes less appealing.
Doesn't make sense. Yeah.
10 years out, if you do my analysis and assume 2% appreciation a year, 10 years out, you only have 9% equity.
Yeah, you don't even have enough to refi. Yeah.
So exactly. You're getting in a position where you're taking on the downside risk.
Correct.
There's more of that risk.
I agree.
It comes into play. And again, here's that poll that I ran. And so I think at the end of the day, given the lackluster response, given how quickly they kind of pulled back and started,
it's going away. Yeah.
I think the administration tested the waters and they'll stop short of implementing it.
Agreed.
That's sometimes been how Trump kind of operates. He kind of floats things and doesn't always kind of necessarily move forward with them. Now, this whole portable mortgage thing, I don't know the specifics of this, and I don't know if it's just been announced to kind of distract of the 50-year mortgage.
I think you nailed it. I think they announced it to distract.
If that were actually done, and depending on how it's done, and if it can even be done, but just the theory of it, that creates housing demand.
Oh, agreed. I think loan portability. This is something I came up with just as a crazy idea 3 years ago. I'm like, if you want to see the housing market, shot with electricity, make loans portable, and it'd be crazy.
That though might create that could, if you actually did it and it was really fast, and we're already kind of the strained level of like historic between like price to incomes,
Yeah, yeah.
that might really put it in a, kind of, and so I don't even know if they would do that, but just like that is something, depending on how it's done, if it can even be done.
So I've talked to a couple of loan brokers about this since yesterday on purpose, and most of them laugh at the idea. They say that they say that we've talked about loan portability in the US for the last 20 years in private meetings, and everybody just laughs. It's just not coming, is what they're saying. So it's
And so I'm very skeptical of it. It's just like kind of laying out, like, I think the 50-year, even if done, niche, probably not that much demand given this current backdrop, right? Where you're kind of looking at less appreciation, right?
Yeah.
Compared to like the previous decade. And then if you look over a portable though, I don't know if that could even be done, but if it were, that's real housing demand.
Folks, at the end of the day, Lance runs an amazing event, Resi Day, but it's really a cumulation of ResiClub analytics and his weekly content. Lance, where can people get that?
Yeah, so go to ResiClubAnalytics.com, put in your email. You can get signed up for my free newsletter. At the moment, my subscription is kind of moving more from like B2C to B2B. I will at some point roll back out a B2C to consumer product. But if you kind of want in this last minute before it kind of jumps, it's fully B2B, email me, Lance at ResiClub Analytics, and I could give you a deal.
Awesome. Lance, you're amazing. Take care. Talk to you next week. Bye.